Okay, let's take a look at exercise 13-14A. This will help you with the homework assignment that is due on Wednesday. So in this case here, they want us to record each of the following transactions in general journal form, so journal entries. And they give us some beginning balances here, and they list the transactions. So I'm going to read each of these transactions and then talk about how we'll record that. So this first one here, we performed $8,200 of services on account. So again, the format will be, I'll ask myself what categories are affected by that transaction. So in this case here, it's on account. So an asset is going to increase and my revenues are going to increase. Specifically, the asset accounts receivable will increase, and I'm going to record that increase with a debit. So I debit accounts receivable for $8,200, and I credit fees earned for $8,200. So you can see all of that. Next transaction, I collected $5,600 cash on accounts receivable. So here I have one asset going up, cash, one asset going down, accounts receivable. So I will record, I always do debits first, so I'm going to debit the account that's increasing, cash. I debit that because it's an asset, that's how I increase assets. And I credit accounts receivable to reduce that asset. If I increase assets with a debit, I decrease them with a credit. Next, I paid $1,450 cash in advance for an insurance policy. So another asset exchange transaction. So I have one asset, prepaid insurance, going up, it's increasing. Another asset, cash, that's decreasing. So I debit the asset I want to increase, prepaid insurance, and I credit the asset I want to decrease, cash. Next, I pay $400 on accounts payable. So I have a liability going down and I have an asset going down. Well, if I increase liabilities with a credit, that means I'm going to decrease them with a debit. So I'm going to debit accounts payable for $400. And I'm going to decrease my asset cash with a credit for $400. Again, every transaction, debits equal credits. That's critical. Next, I record an adjusting journal entry to recognize $300 worth of insurance expense. So when I do that adjusting entry, I'm going to debit the expense account. That's how I increase expenses. And then I'm going to credit the asset account to reduce it. So I debit insurance expense for $300 and I credit prepaid insurance for $300. Next, I received $1,600 cash for services to be forwarded at a later date. So I have to remember here, when I get money in advance of doing work, that's a liability that's recorded, unearned revenue. So I'm going to want to increase that liability and I'm going to want to increase cash. Well, I increase cash assets with a debit. So I debit cash for $1,600. And I increase liabilities with a credit. And here I'm increasing the liability unearned revenue for $1,600. Next, I purchase land for $9,000 cash. That's where I have one asset going up and one asset going down. So the asset I want to increase, land, I will debit that for $9,000. The asset I want to decrease, cash, I'll credit that for $9,000. Then the last entry, I purchased supplies for $350 in cash. So in that case, I have an asset that's increasing, supplies, I debit that. And I have an asset that's decreasing, cash, so I credit that. So I give it a once over, make sure everything looks okay. I think it does. Please notice that I've skipped a line between each of these entries. That just kind of helps them from running together. It makes it a little easier to see them as separate transactions. So I hope that was helpful. If you have any problems with your homework, as I mentioned before, please don't hesitate to email me or give me a call. Thank you.